In this video, I will help you understand how to look at the same base on the daily time frame chart as well as the weekly time frame chart to determine the quality of the base. I have done hundreds of videos on the daily time frame chart. I recently did a positional stock trading video series which had 50 videos, 50 videos. So I have done quite a lot of material on weekly time frame charts as well. Now is the time to combine all of that knowledge together. So this is the same chart that I took in the previous video. This is first source daily time frame. I will also show you the weekly time frame. And since this is 2nd of July 2024, so it's an old chart. So as per the regulations, we are allowed to use this. So let's have a look at this base. I have already drawn the base for you. The base starts from here. How many points in the base? 1, 2, 3, 4, 5 points in the base, correct? After point 2, how many candles have closed inside the green zone? That is a question which I want you to ask on every single stock that you are considering. After point number 2 in the base, how many candles have closed inside the green zone? The answer is 0. Look at this candle. It tried to go inside that green zone but came down. That is called overhead supply. There is overhead supply in the green zone. The bears are pushing the price down. So what does that tell you about the base? It tells you that there is risk in this base. Okay, it adds to the risk factor. I am not saying don't buy the stock. I am saying the fact that the stock has not closed inside the green zone after point number 2 in the base adds to the risk factor of that base. It reduces the quality of the base. Number 1. Number 2, how do you determine that institutions are not selling inside this base? See, the stock is coming down here, it came down here. You want assurance that institutions are not dumping the stock. Okay, how do you determine that? Well, you look at the volume. But on the daily time frame chart, there is a lot of noise on the volume chart. So for that, we go to the weekly time frame chart. This is how the weekly time frame chart looks like. Okay, so the base starts from here. Count the number of red bars inside the base. 1, 2, 3, 4. 4 red bars inside the base. Out of 4, how many are low volume? This is not low volume. This is low volume. Okay. Yeah, it is below the blue line. This is low volume. This is low volume. So 3 out of 4. So 75% of red bars inside the base are coming at low volume. Red bar means down closing. If you have down closing on low volume, that means institutions are not selling. If institutions were selling, then it would have been a high volume red color bar. It would have been a high volume down closing week. So this gives us some level of assurance that institutions are not dumping the stock. Moreover, you see in this week, the stock shoots up like 8% almost on high volume. Here again, it shoots up another 3.5%, 4% on high volume. And the volume continues to increase till here. Okay, so the rise is coming on increasing volume. Moreover, you look at these two bars, tight closings. Okay, so there is a tight closing inside the base. 75% of the red bars are in our favor. The price is going up on high volume, that too on a weekly time frame chart. The price continues to trade above the 10-week simple moving average. By the way, I have not done liquidity, comparative, technical, fundamental, and market analysis on this stock. So I have not looked at the ratings and the fundamentals. I am just showing you purely the chart. And how do you form a view on a stock? So I am looking at the daily time frame. Since I have taught you the weekly time frame chart analysis, now I am also including in my discussions the weekly time frame chart, especially the red bars, the volume, and commenting on the quality of the base. Okay. So I am not saying don't buy the stock. I am saying look at the risk factors. The red bars on the weekly time frame chart reduces risk. However, no green zone closing on the daily time frame chart increases risk. So there are going to be factors that will increase risk in the base. There are going to be factors that will reduce risk in the base. So you have to weigh the risk. The biggest mistake that traders make is when they look at a stock, they ask themselves, should I buy the stock or not? That's a wrong question to ask. The right question to ask is, how much is the risk presented to me by this stock? Okay. When you ask a question like, should I buy this stock or not? That has a binary answer, yes or no. Correct? We don't want to ask ourselves binary questions. We want to ask ourselves open ended questions so that we remain flexible. So we weigh the risks. We list down the points which are in our favor. We list down the points which are not in our favor. I would also look at the count, the base count. I would also look at the name of the pattern on the weekly time frame chart. I would look at the industry group rank. I would look at the relative strength of the stock, especially if it is above 80, I would be very much interested, right? Moreover, I would look at whether the stock is a swing stock or a positional stock. How do you differentiate whether a stock is a swing stock or a positional stock? Well, we have 12 fundamental criteria, which I discussed in the positional trading stock trading series. Out of 12, if 7 of those criteria is met, that's a positional stock, else it is a swing stock. So if 6 out of 12 criteria are met, okay, I will take the trade on the daily time frame chart. I will not take the trade on the weekly time frame chart. I might consult the weekly time frame chart just to have a look at the volume, just to see whether institutions are selling the stock or not. But I will not take a swing trade on a weekly time frame chart. A swing stock is a stock which meets less than 7 out of 12 of our fundamental criteria, which I discussed in my positional stock trading series. So memorize those 12 fundamental criteria. Those are given in William O'Neill's book as well. So it's not some my own new creation or some new discovery or invention. They are all consistent with what is written in William O'Neill's book, How to Make Money in Stocks, 4th edition. Please buy that book and start studying from that book. So swing trade means daily time frame. Positional trade means daily time frame and weekly time frame. However, positional, I will do my best to take the trade on a daily time frame chart rather than a weekly time frame chart, because on the daily time frame chart, I might get an early entry. I might get a chance to buy the stock early if I'm taking the trade on the daily time frame chart. But if on the daily time frame chart I don't get a proper buy point, then I will attempt to buy the stock on the weekly time frame chart, because positional stock is something that I don't want to miss out on. It is displaying good fundamentals. That is the reason why. So remember the orange trading system. Start with filtering, shortlisting, stock selection using liquidity analysis, comparative analysis, technical analysis, fundamental analysis, and market analysis. Determine your position size, execute the trade on a high volume breakout, ensure that you manage the risk with a stop loss, and then manage the trade with a proper and a simple, effective trade management plan, which I discussed in my positional stock trading video series. Coming back to the daily time frame chart. If this was a swing trade, I would probably not take the trade because there is no green zone closing after point number 2 inside the base. Swing trade by default is a riskier trade than a positional trade, because in swing trading we don't give much weightage to the fundamentals. Even if the fundamentals are weak, we might take the trade. However, if the fundamentals are weak, the overhead supply is visible on the chart, the stock is unable to close inside the green zone, All of these are pointing towards too much risk. And I would give the stock some time to come in the green zone, create another buy point, sustain in the green zone for 4 to 5 candles, and then I would like to pick up the stock at an appropriate level with a smaller stop loss, preferably less than 8%. 8% would be the maximum stop loss I would keep. It doesn't matter whether it's a swing trade or a positional trade. 8% is my standard stop loss. Now, in this case, point number 3, which is the high of this candle, which is 217.23, that's the 217.23, that's the pivot point. And if this were a swing trade, I wouldn't buy the stock. I would give it some time. If this were a positional trade, I might have considered the stock. Okay. Positional trade means fundamental strength. Irrespective of what happened, look at this. The stock continued to go up, remained in a confirmed uptrend. It shot up. I think it met the 20-25% target. From here, if you measure, yeah, somewhere in this area, in these 3 candles, it met the 20-25% target, that too in a very short period of time, maybe 3 to 4 weeks, a month, from 2nd July to around 29th of July. Okay, around 25% target is met. So, in a month or so, the target was achieved in spite of the fact that there was no green zone closing inside the base after point 2 inside the base. So, remember what I said, no green zone closing simply adds to the risk factor. It does not mean that you should not buy the stock. You could buy, but you should buy with the awareness of risk. Because when you are aware of risk, only then you would control your position size and keep a tight stop loss. If you are not aware of risk and if you end up making money, that is called as an illusion. You have an illusion of profit because in your next few trades, you will end up losing the money that you make on this stock because in the next few trades, you will not be aware of the risk that comes from zero green zone closings in the base after point number 2 inside the base. Okay. So this is bit of an advanced discussion. If you are new to this channel, you may not understand what I'm saying, but hang in there. Okay. Spend some time on this channel. You will understand the terminologies that I am using regularly. And once you get it, you will understand how advanced or next level these discussions are. I hope this video has been helpful to you. Let me know what kind of videos you would like to see. What is it that you would like to learn? Which are the concepts should I discuss except, stock recommendations and things like that. I don't give stock related advice. Anything related to conceptual or educational purpose, let me know. I will cover that in my future videos. Thank you so much.